Good morning, guys. Thursday morning, and I'm Nandita Khemka. You're watching Opening Bell on Moneycontrol. So the mystery is, the air of mystery that was surrounding the Fed meet has lifted now. We have a 50 basis point, a jumbo 50 basis point rate cut coming in from the US Federal Reserve. This is the first interest rate cut in 4 years since 2020. And, of course, it's, the street was divided whether to expect a 25 basis point or a 50 basis point. But we have it now. It's a 50 basis point rate cut with the dot plot indicating another 50 basis point rate cut for the rest of the year and a full percentage point rate cut for 2025. Of course, we will be getting you a global voice, to put into perspective what that really means for the US economy, in terms of Fed's inflation goals and what's happening with the labor market as well. And what the Fed rate cut means for emerging market flows as well. Lots of stocks in focus. The likes of NTPC, GE, T&D India, and IREDA is another one that will be in focus. We'll be addressing all those stocks. We'll be taking up all your stock-related queries as well. So keep them coming in, and we'll try and address them. But before we move any further, let's quickly take a look at the headlines at this hour. In an aggressive start to policy easing, the US Fed delivers a jumbo 50 basis point rate cut amid signs of inflation easing and a weakening labor market. The Fed's dot plot also indicates another 50 basis point rate cut by the end of the year. Wall Street reverses course to end lower after the S&P 500 and the Dow hit record levels in intraday trade. Asian markets open largely higher, with the Nikkei gaining over 2%, while the GIFT Nifty is suggesting a higher start for the Indian market, although a flat start. And crude snaps a two-day gaining streak, with the Brent falling to around $73 a barrel, even as the US Fed delivers an outsized rate cut. Meanwhile, gold prices ease after hitting record highs. Okay, then let's bring on board our global voice joining in this morning to understand what this rate cut means and how to read into Fed Chairperson Jerome Powell's commentary and tone. Peter Cardillo, Chief Market Economist at Spartan Capital Securities, joining in. Peter, great to have you on the show. I just want to understand, were you in the camp that was expecting a 50 basis point rate cut? And does this signal a deeper slowdown in the US, or would you say the quantum of rate cuts that the dot plot is indicating suggests that we are actually looking at a soft landing itself in the US?
No, to begin with, I was not in the camp looking for a 0.5% rate cut. I was looking for 25 basis points. I thought the Fed would start slow. Instead, they surprised us. And I think this was an admission by the Fed that they probably are behind the curve by maybe a meeting or two. Obviously, they pointed out the fact that inflation is moving lower. In fact, Powell, during his press conference, alluded to the fact that inflation is getting very close to the 2% target. But obviously, the Fed is quite worried about what's happening in the labor market, and I think that's the reason why they cut by 50 basis points. Now, what does this mean in terms of the market? Well, we saw the initial reaction was positive, but then as traders began to digest the cut, at the end, the indices actually closed lower. And I suspect that this 50 basis point cut is not likely to restart a new leg of the bull market, another upward leg of the bull market. I think rather during the remainder of September that we are likely to hover around the present levels. In other words, a market that's not going to make much progress to the upside, but not necessarily fall hefty from these levels. So it's going to be a take and give market situation until we get the new batch of employment numbers. Now, next week we will be getting the PCE price inflation, and I'm expecting that to show inflation is moving lower, and probably on a year-to-year basis, we could actually see inflation at 2.4%, which would be in line of what the Fed is thinking right now.
Right. What about the dot plot? Although Fed chairperson has said that this is not the new pace of rate cuts, right? Because this time around it was 50 basis points, but going forward, we are looking at 25 basis point rate cuts for the remainder of the year. But would you be expecting a higher quantum of rate cuts for the rest of the year? Higher than what the dot plot has indicated. And how would you read into the commentary? Would you call the tone hawkish skepticism, or how would you surmise the tone that the Fed chairperson adopted?
No, I think from what the dot plot indicates that there'll probably be two more rate cuts, possibly 25 in November and 25 in December. And that basically means that we're looking at 100 basis points for 2024. And again, depending on the data, there might be another 50 to 75 basis point in 2025, which means 175 basis points total. And that basically brings us down to a normal rate based on the yield curve, a normal rate that will take us back to levels that the economy can continue to grow. And of course, if there should be a reversal in inflation, then all bets would be off, because Powell made it very clear that they can always backtrack and reverse what they've done.
Right. Going forward, the Fed has actually also raised the unemployment forecast for 2024, 25, 26. Do you expect a significant slowdown in the labor market here on?
I think we're looking at a slowdown. I'm not sure if it's going to be significant. I think we could maybe in 2025 move above that 4.5% unemployment rate, closer to 5%. So I think that's what the Fed is really worried about.
All right. And what does this really mean for the dollar and, subsequently emerging market flows? Do you expect India to emerge as a key beneficiary of flows that will go into emerging markets after this rate cut? And vis-a-vis China, what are your thoughts about India?
Well, as far as the dollar is concerned, the dollar index before the announcement was hovering just about 5 points above parity. And then afterwards, the dollar shot up. So that is the index. I don't really put too much into that, because I still think that the dollar can weaken, and not necessarily due to U.S. macro news, but perhaps further unwinding of the carry trade. Now, as far as the emerging markets are concerned, I would expect that India, South Africa, and South Korea are likely to begin cutting rates, and cutting rates soon.
Okay, that's the view then. Peter Cardillo there, thanks a lot for taking out time and joining in and sharing your thoughts with us. Look forward to our next interaction, next time when the Fed, cuts interest rates. Well, on that note, just about 4 minutes to go for the, opening bell. And of course, let's take a look at what the Qs are looking like this morning. The Nifty, in fact, ended below that 25,400 mark. But remember, we did hit a fresh all-time high in yesterday's session, but with the Nifty coming very close to that 25,500 mark, 25,482. That's the new all-time high level on the Nifty. But what really weighed in on sentiment was the entire IT pack. The IT index, in fact, lost somewhere around 3%. Remember, day before yesterday, we saw the IT index hitting a fresh high, and yesterday it came under intense selling pressure with stocks like TCS, HCL Tech, Tech Mahindra, all of them emerging as top laggards on the index. But one pocket that managed to buck the trend, and how, was the financials pack. On the weekly expiry day, the Nifty Bank held out in a weak market. That index gained somewhere around 1% or thereabouts. You had the likes of ICICI Bank, HDFC Bank, all of them doing well. But ICICI Bank, mind you, hit a fresh high, and the market cap for ICICI Bank crossed that 9 lakh crore rupee mark for the first time. The broader end of the markets were under pressure. Mid-cap index ended lower for a second day on the trot. The mid-cap index lost somewhere around 0.7%. It was the underperformer. And if you look at the futures and options Qs, the Nifty put call ratio fell to 1.13 vis-a-vis 1.3 levels in the previous session. Let's take a look at the stocks that will be in F&O ban today. New entrants, Oracle Financial Services, that stock was the top laggard on the Nifty 500 index yesterday. Still in F&O ban, there are quite a few stocks: Aarti Industries, Balrampur Chini, Biocon, Birlasoft, GNFC, Granules India, LIC Housing Finance, Punjab National Bank and RBL Bank. These are some of the counters that will remain in the futures and options ban list. But two stocks are out of F&O ban for today, and they will be in focus today: Bandhan Bank and Hindustan Copper. In terms of fund flows, FIIs, they have turned buyers for the month. And yesterday as well, they bought shares worth 1150 crore rupees in the cash market. DII buy amount was fairly meager, but still they were buyers yesterday as well. So domestic investors, bought shares to the tune of 150 crore rupees in the cash market. But before we take a look at the market open, just about, I think, 30-40 odd seconds to go. Let me check if my, if our technical guest for today is ready or not. Ruchit Jain, lead research analyst at 5paisa.com, is joining in this morning. Ruchit, yesterday we hit a fresh high, then we reversed the course, and of course the US markets also came off highs yesterday, right after the Fed rate cut. Today, GIFT Nifty hinting at a muted start. What would you envisage? Could we make a dash at 25,500?
Hi, very good morning, Nandita. And I think last three trading sessions we have seen some consolidation, which is only because of this event which was there. So markets have not reacted anything negatively to the event, and there is no negative shocks as well. So I think markets would continue its course on the higher side. So since the broader trend remains positive, and we have not seen any immediate supports getting breached, so we should see a continuation of the positive momentum.
Okay, continuation of the positive momentum. We have the first ticks coming in, and it's a very strong start. 25,500 on your screens. 120 point bump up, 130 point bump up on the Nifty. So we are at fresh record highs thanks to that jumbo rate cut that has come in from the US Federal Reserve. First rate cut in 4 years, mind you. 500 point up move on the Sensex. So the Sensex also almost at 83,500. There is strength in the broader end of the markets as well. So the Nifty mid-cap index gaining somewhere around 0.6%, a record high there as well, if I'm not mistaken. The Bank Nifty continuing its momentum, 0.5% uptick there as well, 300 points. In fact, the Bank Nifty is just less than 500 points away. I think somewhere around 300 points away from record highs as well. Who knows? On the Bank Nifty as well, we can make a dash at record levels. But in terms of other movers, let's take a look at what the other sectors are doing. Really, IT pack in particular, I want to see what IT is doing, because yesterday that was the top laggard. Today it has made a good comeback. 1.5% gains on the IT index. All the sectoral indices are trading in the green. The India VIX index has also cooled off substantially, 8% lower. The India VIX index below that 13 level. But IT is the top sectoral mover today. So after yesterday's dropping, some buying coming in there. Of course, there is good news in terms of interest rate cuts, and IT clearly reacting to that. The realty pocket is the other one that's doing well. 1.5% gains coming in there as well. Autos are doing well. Banks, as I already mentioned. FMCG also. So all the sectors trading in the green. The metal pack also up and about 0.8% kind of gains coming in there. Let's take a look at the individual movers then very quickly. The list of losers is very slim rather, to say the least. LTI Mindtree is the top Nifty gainer, followed by NTPC. NTPC is in news because its arm, NTPC Energy, has filed for 10,000 crore rupee IPO. So that stock is in focus. Wipro, Tech Mahindra, Infosys. So 4 out of the 5 top Nifty gainers are from the technology pack. The picture was completely opposite yesterday. All the 5 or 6 losers on the Nifty were from the IT pack. Tata Motors doing well. Bajaj Auto, there are some brokerage notes on Bajaj Auto, so that stock reacting to that. Grasim, Eicher Motors, Bajaj Finance continues its up move, and so is HDFC Bank has moved above that 1700 level. So good going there as well. Only 3 laggards on the index. ONGC, there has been a downgrade, brokerage downgrade, and the stock reacting to it, and BPCL. These are the only 2 laggards on the index. But Ruchit, looking at the traction that we are seeing on the bank Nifty, would you expect a dash at record levels here as well? Because the Nifty Bank Index has started performing quite well.
Yes, and that too after a long period of underperformance. We had seen that the Nifty Bank Index had underperformed significantly till mid of September. But finally, we have seen that last 1 week the index has given a breakout from that consolidation pattern, and now the momentum has shifted there. So I think yes, then since it was an underperformer, so a catch-up move could be seen, especially because the move is being led by some private sector heavyweights. And even in the NBFC space, we are witnessing a good price volume action happening. So I think relatively, banking and financial space from a short-term perspective could see a good outperformance.
Okay, and any particular level you'll be watching out for on HDFC Bank because the stock has cleared that 1700 level, which it wasn't being able to do for quite some time.
Yes, so in fact, the last 1.5 months, the stock had seen some consolidation post that correction which we saw in the month of July. But one good thing was that in this entire consolidation phase, the stock did not breach its important long-term supports of 100 DMA. And now it has resumed its uptrend after breakout above that 1670, 1680 hurdle. So I think the stock should head higher towards its previous swing highs, which were around 1790, 1800 kind of level. So this, of course, being an heavyweight, would be the stock where we would see some leadership coming to take the Bank Nifty also higher. The recent gap area, which was at the start of July, will be filled around 1760. So 1750, 1760 would be the first resistance area now, where one can expect this momentum to face some hurdle. But once that is clear, then I think new highs could be there for HDFC Bank as well.
Okay, that's about HDFC Bank, but as we speak, we are less than 200 points away from the record high levels on the Nifty Bank Index. But IT has staged a good comeback today, but after yesterday's correction, which IT stock is looking attractive for entry? We have a couple of queries also coming in on the IT pack. I can spot a query from Som Mendigar on IT, and of course, same question that I am posing to you. Which stock is looking attractive after yesterday's correction?
So I think if you look at yesterday's fall, there are some stocks which have not seen that much correction compared to the Nifty IT index, and that's where the relative outperformance is seen. So stocks which are not correcting much compared to the other stocks within the sector, I think one should look at buying opportunities in such names. LTI Mindtree one comes to my mind, where yesterday we witnessed some intraday correction, but the stock managed to recover well from the lows, and today we have seen that any kind of pullback move again in the IT index, then the stock has is almost surpassed the recent swing highs as well. So I think LTI Mindtree could continue to do well, being a relative outperformer, and we could see levels around 6,700 to 6,800 soon.
Okay, another stock that's in focus today is NTPC. It's among the top Nifty gainers today. Of course, one of its arm has filed for NTPC Green Energy has filed for 10,000 crore rupee IPO. Looking at the stock, it hasn't really been firing up as much, right, in tandem with other PSU stocks. But post this development, could there be a breakout?
We could see a slow and gradual up move in the stock. The overall trend for the stock has been positive in the recent correction, and so the stock has managed to form a good support base around the 390-400 range. So I think previous swing highs were around 426, 427, almost around those. We are trading around those levels. So the kind of momentum the stock has seen, so I think we should surpass that level, and we could see stock heading towards 435, 440 in the near term.
Okay, 440 is the level to watch out for. But one stock that has been, feeling the brunt of a cool off in crude prices has been ONGC. And this morning we have a note from HSBC wherein they have downgraded the stock to reduce, and the target price is at 235. of course, they've pointed out that falling oil prices expose the future project viability for the company, and they've also, spoken about the key concerns that they have. Falling production rates, lower KG field guidance, risk of unrelated capex. These are some of the key concerns, and there's a weaker performance of subsidiaries could also impact dividend going forward. But given the kind of correction that ONGC has seen, what should one do with this stock, Ruchit?
So, Nandita, I think this is not one stock where I would see from a very short-term trading perspective. But if one is looking from a long-term investment perspective, then considering the stock consistently gives good dividend, and we have seen that such stocks generally have limited downside in terms of price-wise corrective phases. So there could be some time-wise correction. If I look at the levels on the ONGC from a mid-term perspective, then 275 is the first support, followed by strong support around 260. So I think these are the levels where, in case if the stock corrects, then that should be seen as a buying opportunity again. So I think price-wise downside seems limited after the recent correction. There could be some time-wise corrective phase, and it declines towards that 275 followed by 260. These are two levels where one should look for buying opportunities in ONGC. But as I said, not from a trading perspective, but from at least one should have a time horizon of 9 to 12 months, and the stock could deliver good returns. So this is more of a portfolio stock, I would say, rather than a trading stock.
Okay, I think we had a query on ONGC. Abhishek Singha. Abhishek, I hope this answers your query. But I want to take up a query on Titan Company. This one's coming in from Madhukar. Wants to know whether it can be bought, and longed at current level. Looking at the stock performance of Titan, it hasn't really been sparkling as much. Okay, the gains have been somewhere around 9% or thereabouts over the last 1 month. For the last 5 days, it has been fairly quiet, and other players like smaller players like Kalyan Jewellers, are doing better than the sector leader. So within the jewelry pack, would you advise looking at the leader, or would you say that it is time to look at smaller players because they have been performing better compared to Titan?
So I think the smaller players have already seen a run up. So this would be more like chasing after the up move has already been there. So I won't recommend chasing the smaller players at current levels. But certainly if you're looking for buying within the segment, within the jewelry segment, then Titan looks good even at current levels. We have not seen that kind of run up because it's more of a heavyweight, and usually whenever we see such uptrends, of course the mid and the small cap stocks tend to outperform heavyweights. But consistency comes when there is a period of volatility. So I think even if we see some sort of profit booking going ahead, then the downside in Titan would be limited compared to the other smaller names which have seen a very sharp up move. So Titan, I think, would be preferred at current levels compared to other stocks because we have not seen any kind of significant run up happen compared to others. So there is a good margin of safety over here where the catch up move could happen. So Titan can be bought at current levels, but keep some room that in case if you get any dips towards 3600, 3550, then you can look to average around at those levels as well. So won't recommend to buy 100%, but can start buying at current levels with some room to average on any kind of dips.
Okay, that's the view. Hope this answers your query. But before I move on to other queries, I want to ask you about two-wheelers, Bajaj Auto, Hero Moto. These stocks have been on an uptrend. They have been speeding up. Yesterday, of course, it was a down day for Bajaj Auto. But once again, this morning, the stock is doing well. And, we have, HSBC that has come out with a note where they have raised the target price for Bajaj Auto from 11,000 to 14,000. Yesterday, we had a note from CLSA where they have cut the target, in fact, not cut the target price, they have a target price of 7,000 on the stock, which is like almost 40% lower than where it is at right now. How are you looking at Bajaj Auto in particular on the charts? Because the views are pretty divergent when it comes to target price.
So within the auto space, we can clearly see the two-wheeler space as outperforming, especially Bajaj Auto, followed by Hero Moto also, which has recently given a breakout from its previous swing high resistance. So I think when the trend is set, this trended up move is likely to continue going ahead. Technically, if I take retracement, that it gives potential targets around 12,400 to 12,500 for the short term. Even Hero Moto over here looks positive, where recently we have seen price volume action again turning positive. So here also we can expect levels around 6,300 to 350 kind of range. So we are positive on both these names from a short-term perspective. Compared to other auto names, last 1 month have been much better for the two-wheeler names. So I think that trend is likely to continue.
Okay, that's the view on Bajaj Auto and Hero Motor, the two-wheeler pack, so to say. But we have a query coming in on REC from ARC. He wants to know what would be a good entry point. Now, REC has seen a good correction from highs, right? Over the last 1 month, we've seen a 6 to 7% kind of a correction. Would now be the time to get into it?
So this correction is more of a corrective phase within an uptrend because the monthly momentum readings were quite overbought post the recent run up. So that are getting pulled off. So if I look at the supports, then weekly 40 weeks moving average support is coming around 500 to 510. So maybe in case if you get some more dip towards that 510, 520 maybe, then the risk reward issue would turn favorable where the stop losses would be smaller. So I would suggest a buy on dip strategy where in case if we see some more dips, then use that as a buying opportunity.
Okay, buy on dip should be the strategy on REC. Hope that answers your query. But we have a query from Anune, and he wants to know your thoughts on Titagarh, where he is making some bit of a loss, a 26% loss on his investment. He bought it at 1752, and he wants to know what should be done because the stock is now at 1283. Should he book losses, average out, or what should he do, or should he hang on?
So these are not the levels where losses should be booked because he has already seen that corrective phase. I think if he would have kept some stop losses at higher levels and exited earlier in smaller losses, that would have been better. But not at current levels because on the weekly charts, the support is coming around 1200 to 1250 range. So there may be some more pain, but the downside seems to be limited from here on. So maybe in that range of 1230, if it comes around 1200, 1230, there you can look to average out so that the cost of purchase would come down. So any pullback move from that support if comes, then he can get an opportunity to exit around that average cost. So for now, continue to hold on your existing positions around 1230. If you get, then you can look to average your positions there.
Okay, I hope that answers your query, Anunay. The next query is coming in on the defense pack. A couple of queries from the defense pack. Vic wants to know your thoughts on HAL and BEL, and Prabudh Bhatia wants to know whether one should make a re-entry into defense stocks after the kind of correction that they have seen, the likes of HAL, Cochin Shipyard, and GRSC. How would you view the entire pack now after the kind of correction that we've seen?
I think we have seen a very strong uptrend in or most of the defense names in last 1.5 year. So usually rather than chasing the stocks when the stocks are going up, whenever we see such corrective phases where the long-term trend is positive, that definitely should be used as a buying opportunity. So I think that's where the risk reward ratio become favorable. So I think yes, if you're looking from a delivery perspective, then certainly you can take a stock specific approach within the different names and start buying over here. And HAL would be the most preferred name within this space because if you look at the valuations as well, it's much better valued compared to the other peers within the defense names. So I think HAL even technically, if you see, then the price-wise downside seems to be limited from here on. So one can initiate fresh longs at current levels in HAL.
Okay, I hope that answers your queries. The next one's coming in on Zydus Life. This one's coming in from Dheeraj Sharma, and he wants to know whether he should hold or buy, and whether it's good for the long term because the stock hasn't been doing all that well. At a time when other pharma stocks have been doing well. So how should one approach?
So I wouldn't recommend adding more money to this. So do not average at current levels, but you can hold on your existing portion for some pullback move again towards 1150 kind of range where you can take a review on the stock. On the weekly charts, if I see, then the major support for the stock is coming around 1000 kind of levels. So maybe if you get around 1000, if you want to average out, then those would be the levels where you can look for averaging, but not at current levels.
Okay, that's the view. But there is a query on Reliance Power as well. Ankit Wali wants to know, should he hold Reliance Power and what should be the next target?
So there are news-based moves in the stock. We know that in last couple of trading sessions also there have been positive news, and that's why we have seen back-to-back upper circuits. So you can continue to hold on for now, but do keep stop losses on your positions. As of now, the strong support base for the stock has been built around 34. If that remains at intact, first targets you can expect 38 followed by 42 kind of levels.
Okay, that's the view. Hope that answers your query. But there's one query coming in on BL Kashyap. The stock is in news on the back of an order win to the tune of 220 crore rupees. Now this query, I don't know, I think Adit Taneja wants to know your thoughts on whether it should be added for the short term. Looking at the stock price, it's just about up 0.7% or thereabouts. Should one buy now, or how would you look at it? Not very far from 52-week high as well.
Yeah, but no such signs of any short-term momentum in the stock. Of late, we have seen some correction, and now the stock is more into a consolidation phase. A major support is around 97 rupees, whereas the resistance is around 108, 109. So I think it would continue to consolidate within this range. So either around 97 or on a breakout above 109. I think that's where no fresh momentum could coming on the positive side. So no trade setups at current levels. I would recommend to avoid for short-term trading.
Okay, let's move on to our last query for the day then. Altaf Hussain wants to know your thoughts on macro tech developers for the short term. Realty stocks, there are volatile moves in realty stocks, but within the pack, macro tech, would you bet on that?
So if you're looking from mid to long term perspective, then yes, you can go long at current levels because the prices have also seen a correction of late. 1150 is where the major support base has been seen. So your stop losses would be below 1150 from current levels, and on a pullback move, you can expect levels around 1500 to 1550 range.
Okay, that's about macro tech developers, and this sums up our query segment for today. But Ruchit, before I let you go, what are your top trading picks for today or with a 1 to 2 day time horizon?
So I think overall we have spoken about NTPC, which looks positive still. I think so. One can look for fresh buying over there. For 440, we discussed targets for NTPC, so one can expect levels around 414 in the near term, and stop loss would come around below 418. So with stop below 418, one can go long in NTPC for targets around 440. And Hero Motoko would be a second pick where the structure looks quite positive. So from a short-term perspective, can buy at our current levels with stop below 5800. Potential targets are around 6350.
All right, that's the picks coming in from Ruchit. With that, Ruchit, thanks a lot for taking out time and joining in this morning.
Thank you, ma'am.
And sharing your thoughts with us. Always a pleasure, and look forward to interacting again sometime soon.
Thank you.
Well, with that, let's take a look at what the markets are doing. Of course, it's turning out to be a thriller of a Thursday. We have hit a fresh high. In fact, the Nifty hit a fresh high of 25,587. Right now, we are somewhere around 25,557. And, there is a broad-based strength in the market. It's an almost 200-point kind of a gain on the index. Sensex has surged over 600 points. The mid-cap index is also showing strength, 0.6% higher for the Nifty mid-cap index, and the bank Nifty 53,200. We are almost there, and just about less than 150 points away from record levels on the Nifty bank index as well. So strength all across, moving from strength to strength. The advanced decline ratio firmly in favor of gainers, almost 2:1 or over 2:1. 1,576 advances to 661 declines. So yes, the breadth is also firmly in favor of gainers, and barring a few stocks like ONGC and BPCL, most of the stocks on the index are doing well. NTPC being the leader, 4% gains, of course, after NTPC Energy files for its 10,000 crore rupee IPO. Bajaj Auto also doing well, and banking names like Axis Bank, HDFC Bank, featuring on the gainers list. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Have a great day, and of course come back and join us at 3:30 p.m. on Closing Bell as well. Thank you.